Get you that markets update now. The JSE looking set to get a lift from Tencent's rally. Heavyweights, Naspers and Prosus look set to be lifted today, sparked by pressure on authorities to end the strict zero-COVID policy in mainland China. Let's dissect these and other business news with Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank. Mr. Thulare, top of the morning to you, sir. Let's start with the Rand, stronger against the dollar. The Rand depreciated by 12.57%. This is against the greenback so far this year. Give us your perspective.
Good morning, Claudia. I suppose, look, it's been quite an interesting year, and I suppose just obviously this morning we're slightly stronger, but I mean, if you look at what happened yesterday morning, every emerging market currency was lower, especially after the more hawkish Jerome Powell statement that we had on Wednesday evening. I think that put a lot of pressure on a lot of EM currencies. I mean, the losses obviously come after some initial gains in risk assets following obviously the Fed's decision to hike interest rates by 75 basis points, which was for the fourth consecutive time. I mean, the volatility indicates how carefully the markets are obviously weighing each word and each implication. Obviously, we're now looking at higher rates for longer for the future for emerging markets. And I think also the strong dollar and also the hints from Jerome Powell that the terminal rate could be higher in the US. I mean, this is now signaling to us that next month at their next meeting on the 14th of December, they will be hiking rates again. And this is amid the high US, employment numbers that we are seeing. And obviously, this is obviously going to bode not only for South African Reserve Bank, but also for the ECB, for the BOE. And also, this is going to put a lot of pressure on emerging market currencies. I mean, just the likes of the South African Rand, the Thailand Baht, the Chilean Peso. Those are some of the worst performers that we have seen over the past couple of months. And as you rightfully say, year to date, the Rand has lost about 13% against the dollar. Just yesterday afternoon, we touched 18.52. Now, that is 48 cents shy of, touching that $19 against the, mark. And I think that is going to be quite critical because if you cast your mind back to 2020, the all-time highs against the dollar is 1935. So if anything, we're not too far from all-time highs, but I suppose that, if you look at the last 8 weeks of the year, there's quite a lot of risk factors that are coming in. I think the three key ones is obviously going to be the 24th of November. That's when we have Lesetja Kganyago and team giving us their last MPC for the year. We've also got the Fed on the 14th of December. As I said earlier, we're expecting them to increase interest rates again. It's a question of whether do they go by 50 basis points or 75 basis points. And then obviously, as you said earlier, the ANC obviously, giving us some update in terms of logistics, etc., for their much anticipated elective conference. That's also going to be something that the markets are going to be watchful of and mindful of. That's the 16th to the 21st of December. So it's all about central banks and politics. So that's obviously going to drive where these markets go. And unfortunately, the Rand will be hinging on every word from central banks to politicians and also the sentiments that we see globally.
I'm tempted to ask you what the markets would be looking out for on the outcomes of that conference, but I will shy away. Let's stick with the central banks. How are the markets reacting to the Bank of England's rate hikes?
Quite an interesting one. I mean, the BOE raised the rates by the most in 33 years, and that's, strongly pushed against market expectations for the future increases that we're going to see there. It was quite a dovish hike, even though, the MPC saw 7 members wanting to lift rates by 75 basis points, which is now pointing to 3%, which is the highest level that we've seen in 14 years. Now, the size of the move will obviously reduce the risk to a more extended and costly tightening situation later. But now already new forecasts in the UK are seeing inflation peaking at 11% in the coming months and then falling close to zero by 2025. But obviously the risks are to the upsides. Don't forget that we've still got the geopolitical tension out in Eastern Europe. That's going to obviously impact energy and also inflation, and obviously put upward trajectory on prices across the board. I mean, the pound did slump against currency pairs. The unfortunate thing is that obviously the Bank of England is acting without any knowledge of what the Treasury is going to come out and what their thinking is. I mean, if you remember, Chancellor Jeremy Hunt is coming through with his fiscal statement in the next week or two. So that's going to be quite interesting because the US and the UK are facing very different circumstances at this point in time. Obviously, there's a rise in electricity and natural gas prices in Europe, which is obviously, going to restrain the economy, and it's going to take some of the wind out of the inflationary pressures. But nonetheless, I suppose for the BOE, just like the Fed, just like the Reserve Bank locally, it's going to be a data-dependent approach. It's going to be waiting to see what happens in terms of all the data points and obviously how things unfold on a global scale with regards to the geopolitical tension, the inflationary pressures, the energy prices. It's a cocktail of issues that the global central bankers need to deal with at this point in time.
Yeah, let's talk company news for a moment. The MTN Group posting its quarterly update for the period which ended on the 30th of September 2022. We've seen how the other units of MTN have performed across Africa. Talk us through how the overall group's performance has been.
So look, I think quite a decent set of numbers from MTN. I mean, their group service revenue grew by 14%. I mean, voice revenue grew by close to 3%, and data revenue growing by 33%. I mean, that's a no-brainer as to where the world is going. I mean, as we've touched on MTN over the past couple of months, data is the new, revenue source, and that's why you're seeing that revenue up by 33%. Also, subscriber numbers have increased by 6.8%. Now they've got something like 284 million, subscribers. And obviously the active data subscribers has also increased to about 135 million. But obviously the company is experiencing difficult macroeconomic, geopolitical, and also regulatory conditions. And obviously they need to price these in, obviously, to mitigate the risks of the current environment and how they perform over the next few years. And obviously they have said, what also contributed to their muted revenue growth was obviously the trading environment pressures combined with load shedding locally. I think if anything, every company at this point in time is obviously delivering these sets of numbers on the back of high inflation, rising interest rates, and obviously unemployment, and also the load shedding, obviously, which is obviously, contributing to a negative overall network availability, and some business functions can't function on the back of having no connectivity to the networks. And also, I mean, if you think about what's happening in terms of Nigeria, which is their biggest market, that has obviously contributed very significantly to them. That has helped increase their group service revenue by close to 16%. But nonetheless, MTN has come out and said, look, the macroeconomic pressures that we are facing from a local and global perspective are likely to continue impacting their performance in South Africa and also the rest of their operations into the fourth quarter of 2022.
Let's conclude with Apple's market share, which seems to be higher than its technology peers. Your quick assessment of that data.
Look, everything is baffling at the moment, but I mean, Apple is the only company in the top 5 to grow its sales year on year. And I think that's thanks to the popularity of the iPhone 14. I mean, consumers at this point in time, locally and globally, need their money for more important things right now, and they don't see things improving anytime soon. But despite all of that, in the quarter 3 of 2022, the global market smartphone recorded its third consecutive decline this year, dropping around 10%, making it the worst quarter 3 since 2014. But despite all of that, Apple was the only vendor in the top 5 to record positive growth, improving its market position within an 18% market share during the market downturn. And that thanks to the resilient iPhone demand that we are seeing locally and globally. I think the gloomy economic outlook has led consumers to delay purchasing electronic hardware and prioritize their spending to other things. But I think this is going to dampen the smartphone market for the next 6 to 9 months. But despite all of that, I'm just looking at the price point of just the iPhone 14 and some of the previous models. And it just looks like people are also going for the Apple iPhone, and obviously it looks like demand there is not going to stop. Yep. So, you look at relative to the likes of Samsung and Oppo and all these other, service providers, it looks like Apple is actually just growing, and even their market revenue and market cap, it's now, phenomenal where it is. And I think this is why you're seeing it, that their sales are growing year on year. And I think this is really boding well for investors within Apple.
Happy days for Apple then. Matete Thulare, let's leave it there. Thank you very much for that markets update.